Hello, my name is Gordon Da Silva and I'm here to introduce the latest in the Business Owner Success Series on BOSS, and this one's on understanding management accounts on a page. In our opinion, it is absolutely vital that a business knows where it stands. If you've ever spoken to me, you know I ask a series of questions about your business, and one of them is, do you accurately know where you are at any point in time, or at least on a monthly basis? Now, if you don't, it's really difficult to focus on what's important and to know where things are going wrong and how to put them right. And having the management accounts on a page is just one way of getting to first base on this process of accelerating your business growth. It is absolutely fundamental, in my opinion, to know where you stand, know what your profits are, know what your cash balances are, and so on. And so what this program is about as part one is going to be about understanding the profit and loss, and we're going to run another one a bit later on understanding the balance sheet, so that you begin to understand your accounts as well. So let's get started. Here are my contact details if you need them. Telephone number 0208 241 3000, my website at gordonsnight.co.uk, and of course my email at gds@gordonsnight, I've been told, .co.uk is an easy way of remembering that one. So let's get started. Here's a copy of our management accounts on a page. You will see it's just headed up with the company name and year end, and the year end is the one we're working to, if you can look at that. And then the period of the management accounts. The management accounts may be for 3 months, 6 months, 7 months, 8, whatever it is, will be in here. We'll describe what they are. And you can see in here we've got turnover for the current period and for the last whole year, and cost of sales. Now, what the cost of sales are items that specifically vary with the level of sales. So for example, if you were a shop selling baked beans, then by buying baked beans and selling them, the cost of buying the baked beans would be in the cost of sales, and the cost of selling them would be in the turnover. If you were a builder, then your turnover would include the cost of, for example, building an extension, and the cost of sales would include your labor costs, your bricks and mortar, and all the other things that go on into building that extension. That, if you take the sales less the cost of sales, you get to what the accountants call the gross profit, and you'll see why it's gross and not net in a minute. This profit is quite a telling number. It tells us how efficient you've been, especially when you look at the percentages here. You can see this one is 76% in this example, and this one is 77% is the gross profit percentage. So what we're looking at here is it tells us, one is how efficient we are in terms of getting these costs as a proportion of these sales and keeping it constant or improving it slightly each month or each year. And that may well be one of your key performance indicators. If you work with us on the Entrepreneurs Club, you'll be familiar with the key performance indicators or success factors. These are the things specifically that drive your business profits, and if you understand those, the chances of you driving your profits upwards and onwards is much higher than if you didn't. So that's the gross profit, and the other thing it tells us, of course, is if the percentages are going up or down. It tells us whether your efficiency is going up or down. More to the point, it also is a method of protection, in that the Inland Revenue like to see consistent numbers to an extent, and if your numbers fluctuate wildly in gross profit percentage terms between one year and the next, or in fact in anything, you tend to be targeted at a greater level for an investigation. So one of the things we look at, and you should look at, of course, is keeping these numbers consistently improving, is what I'd like to say. Now, if that starts off at 77% and goes up to 80%, and the revenue is interested because we've improved our efficiency, I don't care, because the increased profits that we're going to earn because of that efficiency will easily pay for dealing with the Inland Revenue inquiry, especially if we are being completely honest and ethical about everything we do. So there'll be nothing to worry about on that, and we're keeping good records, which clearly you need to do to get anywhere near these figures on a regular basis. We then have the overheads. The overheads of a business are the items that people suggest are fixed costs, but they're not really fixed because they do vary with activity. So I don't like thinking about fixed costs because, in my opinion, very few things are really fixed. I mean, even rent is not fixed for that long. If you grow significantly, chances are you're going to have to increase your rent and your telephone bill goes up and so on. So, these are overheads. And they're somewhat fixed in that they don't change very quickly. Your salary may not change very quickly, and your accountancy may not change very quickly, but they will change with activity. So in the overheads, you can see we have things like salary, telephone, insurance, accountancy, travel, postage, all sorts of things go in here, and the total of your overheads are shown here. Now, when you take the overheads out of your gross profit, you get what we call our net profit. Now, this is the profit after taking out all these expenses. So really, truly, this is your real trading profit. And it's not quite there yet, because while it's useful to know what that is, we've still got a tax bill to come. And in the management accounts, we're going to be estimating your tax bill. It's not going to be accurate. We don't go through all the calculations we normally do for your final accounts, because that would just be too expensive, and it's not really necessary for management purposes. So here we have 8,500, and the previous year 12,000 pounds, and that is going to be what your approximate tax bill is, and that feeds us the profit after tax. Now that's an amount which is important, because if you're one of our clients, you will know that we're very, very keen on saving you the absolute maximum amount of tax that is legally possible. And based on your ethics, you'll be looking to save as much tax as possible, to develop your business further, to do your own charitable works, rather than let the government decide how to spend the tax money themselves. Whether it's to take 2% off, 2.5% off your VAT bill, which cost the country £12 billion for no actual benefit to the country at all. You can decide how useful the government can spend your tax money, or whether you can decide for yourself how to spend it. What this net profit then does, the profit after tax, by the way, is allow you to see what your dividends are. Let me move the screen up a little bit. And you can see that your profit that you've taken to date in dividends, which is a very efficient way of taking out profits from a company. And by the way, this example is a limited company, so these dividends here wouldn't be true for a sole trader or a partnership. And so that 12,000 is a dividend. The balance that you now have as of these management accounts is £20,000 to take out as a dividend, but we also add on last year's reserves that you haven't actually taken out yet. You'll see the 7,800 here hasn't actually been taken out yet, so we're adding it in. So basically you have 20,000 plus the 7,000 odd, 27 odd thousand pounds to take out as a dividend. The maximum you would be able to take out for a distribution this month is 27,500, leaving a bit to pay for ongoing expenses like your telephone and insurance costs and those sort of things. Now, depending on the complexity of your business, this figure may go up. This 520 may end up being 2,000 or 10,000 or whatever it is, specifically for your business, and we can help you judge what that is on a case-by-case basis. Clearly, as a client of ours, you will have access to all the advice you need on these figures. So there you have it. There's a set of accounts. There's a profit, and this is really the profit and loss account. The next one we're going to do, we'll look at the balance sheet, but just get familiar. This is how much money you're actually making. This is the money you're driving into your cash business, into your business. It may not turn into cash straight away, but if you do all the right things, which if you're a member of the Entrepreneurs Club, you clearly will, it's going to give you the right results. And by knowing what these results are every single month, you'll know that you're on the right track rather than just guessing it. So if you need any more questions answered, please give me a call, Gordon De Silva, on 0208 241 3000. Email me at gds@gordonsnight.co.uk, and I look forward to speaking to you soon. All the very, very best. Talk to you soon. Bye-bye.